Hello traders, Gary Wagner here, just about 11:15 in Honolulu, 4:15 in New York. It is Monday, December 14th, 2015, and this is Trending Markets. We do have the Dow Jones Industrial Average staging a fairly moderate rally today, up about 100 points at 17,368.50, low 138.47, the high 378.02. So as you can see, we are just off of the highs right now as we sit up around 100 points on the day. Now, the S&P is also tracking higher today. It is at 2010.25, up about 9 points, high 2019 and the low 1983. So we've seen quite a range on the day today. We are trading higher, but we're trading higher just off of the heels, or the onset, I should say, of the FOMC meeting, which is scheduled to begin tomorrow, and a press conference on Wednesday. Of course, the expectation is that the Fed will announce the first of rate hikes. They'll talk about the fact, in my opinion, that these will be very slow and data-dependent rate hikes. We'll probably see a quarter-point raise, and that would be the first raise in over 10 years, so that is substantial. How the market reacts to that is yet another question we have to ask ourselves, because the fact of the matter is, I don't believe that the Fed could prepare the investment public better than it has for the onset of liftoff. Now, when we look at these markets, we are flat in the markets, but we are looking for a place to position ourselves and position ourselves from the long side. First chart I bring up, simple daily chart. When we look at the MACD, now these are always going to lag behind any kind of a pivotal move in the market because they're moving average base, but we still have these two moving together rather than closer together. You want to see them at least start to move closer together, and that gives you an idea that you're starting to see some sort of a dynamic terms. In terms of a straight candlestick pattern, as we look at this particular chart, it really is an on neck. It's not quite a piercing line. For it to be a piercing line, of course, what we would have to see is this green candle here actually trade much higher than it is and close either at or above the midpoint of the prior candle, which would roughly be about 2020. So if we can see this market stage some sort of a rally and take us up to about 2020, it would make this candle look a little bit different. It would look something like this. Of course, I don't have my green highlighter on, I have my yellow, so we'll just have to pretend that looks green. It would look something more like that. And then the confirming candle would come actually on Wednesday, or excuse me, on Tuesday, and that would be a higher high and a higher low, and that would give you a confirming candle on this piercing line. My sense is that we will see this market track higher. I am looking still for a Christmas rally. I could be wrong about that. We'll certainly know over the next couple of days, because I think that once the Fed has a press release and actually tells us whether or not they've raised hikes, and we see how the investment public and institutional investors react to that, we'll get a good indication, because my sense is that once we do have liftoff, and that's my assumption, but once we do have liftoff, that will take a lot of uncertainty out of the market. And the lack of uncertainty will take the volatility down, and I believe move U.S. equities higher. So traders, we did have the dollar trading lower on the day. Right now it's trading pretty much unchanged, 97.68. It is up 0.12%, so about 0.1%. When we take a look at our charts here, you get a doji both in the dollar as well as the euro. And so it appears to me, even though we had this down day on Friday, I happen to think that was counter trend, this particular candle right here. I think that that was counter trend, but I think we found some real support in this level. And I would expect, if we get a rate hike, of course, for this to move back up, and vis-a-vis the euro dollar to move down. That's another play we want to consider. But my most important trade that we're going to put on, I believe, is going to take place in the Standard & Poor's 500. Lastly, crude oil. Crude oil up off of these lows that it hit. We were at, 9-year lows. We saw this market decline by 11% just last week alone. You can see that here on this weekly chart, this long candle here, and you can see this slight uptick. I'm not convinced that uptick is any kind of a genuine bottom in the market, but we'll have to see. $36 barrel oil is inexpensive, so we'll have to see how that market pans out. As I said, our next big play, I believe, is going to be a long position in the S&Ps, but we are holding off, at least for now. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow on Tuesday for another Trending Markets. Bye-bye.